Welcome, everyone, to The Real Money Show. My name is Jeremy Wiseman, Vice President of Guildhall Wealth. I'm joined today by Jerry Correia, and we're going to be talking about all things physical precious metals. The number, 18778-SILVER, the website, guildhallwealth.com, and getting involved in the market is super easy. All you have to do is give us a call, go to the website, and we will walk you through how to get involved in the physical market step by step. Again, it's very easy. We're just buying physical precious metals. You can store it yourself. You can store it in a vault facility, which is IROC approved, fully insured, and you can even hold it in an RSP, TFSA, or other registered accounts. Today, we're going to talk about why it's important to have physical precious metals in your portfolio and what we expect in the market, which I believe is going to be explosive. What do you think, Jerry?
Everything is aligned for explosiveness in this market. Very exciting time if we look at the overvaluation of various other asset classes to get involved in. It's a clear decision for me and for many other people that precious metals is the place to be.
You know, when we think about precious metals and having it in a portfolio, and again, we're not advisors, but you can look at the landscape of the investing world and the environment that is happening right now, where you've got stock market all-time highs. You've got debts at all-time highs. We spoke last week on the show about the debt in the U.S. is $28 trillion and counting. I mean, that's not including global debts, which are surpassing $300 trillion, or GDP numbers, debt to GDP numbers, which many countries have surpassed 100%. Even here in Canada, our debt to GDP is over 100%. I think a lot of people would be very surprised to hear that. What does this mean? It means you cannot grow out of debt.
No.
That's it. You've gone past the point of no return. You cannot grow the economy faster than it takes to service that debt. And so what are you supposed to do? These start to become major important reasons for having physical precious metals in your portfolio. Why? Because there's no counterparty risk when it comes to physical precious metals. You can't print gold and silver, and you can't earn money faster than the government can print it. You've mentioned plenty of times on the show, Jerry, that the government of Canada is printing billions of dollars every month. As a people of this nation, we cannot keep up with that.
No.
We cannot keep up with the deficit spending of our government. And so how do we protect ourselves? We have to become our own central banks. We have to take our financial future into our own hands and take control and take action and be able to protect ourselves going forward. One of the things that personally scares the crap out of me is the potential of the inflation caused by these debts.
Mm-hmm. To the average investor, it may sound boring. It may sound like it's a non-event. But truth be told, this is the number one Googled search in the past little bit. Everyone is looking up inflation, what does this mean? It's an expansion of money supply. And as we exacerbate the money supply, we diminish our purchasing power. And that should speak to us Canadians. Canadians, we love real estate, and we all worry about how much can we get? How much of a mortgage can we get? How much purchasing power do we have? But every single year over year, for the past 15 years, gold and silver have protected versus every single major currency, which is on its way down. Every currency is on a race to the bottom, losing purchasing power. That's all these paper currencies do, about average 15% per year. But now we have come to the precipice where we're about to, launch into inflation, which is all funds, central banks. These are the reasons. They're all protecting against inflation.
And this inflation could be of epic proportion. The Fed is talking about transitory this and that. And we don't think that they have the credibility anymore. There's so many analysts that come out and basically say they do not believe the Fed at all. They don't trust their decisions. They think they're simply jawboning the market. It's incredible that the market is paying attention. But, there is an industry that is tied to the Fed. It is a whole community, whether it's the banks and investment community, and they are tied to what the Fed says. It's almost like a hermetically sealed community that they're just paying attention to themselves. When, let's be honest, the stock market is completely divorced from reality.
Yeah.
The Dow has nothing to do with what's actually happening in the real world. Think for just 1 second about the fact that employment has not returned to pre-COVID levels.
You're right.
And it probably will not return to pre-COVID levels for quite some time. And you can think of retail stores that closed, restaurants that are not gonna hire to full capacity again for a long time. I mean, even right here in Ontario, we're still not able to go into a restaurant inside. It's craziness. We don't think that these jobs are going to come back for a very, very long time. And yet you can't, this is what drives me crazy. You can't fill the void of GDP with debt.
No, it's impossible.
How are you going to do that? What is the end game here? Well, the end game is the dollar's toast.
Right.
And we're not just talking the Canadian dollar. We're talking any dollar that's participating in this way. And in the States specifically, it's crazy.
Yeah.
And the money is crazy. They're going to have to raise the debt ceiling in the next month. They're already talking about it. Of course, they're all going to agree the debt ceiling's going to go up.
I wonder what that's going to look like.
And when you look at a chart of all of the currencies valued in gold, what you see is that gold has been very consistent in its gains over the last 20 years.
It's crystal clear. Yes.
Of the price of gold rising, but it's actually not that the price of gold is rising.
No.
It's that the value of the dollar is falling and gold is maintaining purchasing power. However, it's still incredibly undervalued. And again, the gains to be had in this market with any sort of triggering event, and we can talk about those events as we move along in the show today, it is going to be explosive in terms of where the prices of the metals head, which is going to be a way for you to protect your wealth. What are your thoughts on this?
Explosive, yes, because it all stems from, we're at a point where we have to face this inflation theme. There's no way around it. You know, when you have the debt to GDP ratio at over 140% for the United States, you can't grow your way out of it. And if you want to talk growth, that's more inflation. Innovation equals inflation, we talked about a couple shows ago. If you want to expand your economy, you're going to have to print. You're going to have to do exactly what hurt you in the first place. So gold and silver, what does that offer? It offers transparency when there is no trust. We have a motto here at Guildhall: transparency builds trust. We're open. We're an open book. We're selling precious metals. This is the most honest money for thousands of years. Weights and measures, this is what gold and silver offer. And when we are in a world right now where there is little to no trust, especially for those people who are, playing things out, what will the economy look like 5 to 10 years? I know many people don't want to walk through this and play this out. And, it could be a scary thing what will the world look like in 3 to 5 years, or even 2 years? It could be a scary thing, but with precious metals, you're now safeguarding this portion of your life, your wealth. You're undigitizing it, keeping it away from digital anything. You can't hack it. You can't delete it. You can't bail it out or in. This is something that it's in your possession. And even though it's in a vault, each bar is serialized, titled to you, the owner. We're not on the balance sheet there. We're not on that inventory report. These bars belong to you, fully insured, liquid, and entirely decoupled from all of the financial madness.
It's direct ownership of your physical metal in a vault, whether it's with a registered account or your own personal private vault holdings, or you can even purchase the product and take delivery. The other motto we have is, if you can't hold it, you don't own it. Everything that we do at Guildhall is physical, and that's what makes it so easy to be transparent, because you own the physical product, whether you're purchasing it, taking it home, whether you're purchasing it, putting it into a vault and receiving your itemized inventory report, or whether you're using funds within a registered account to acquire that physical product, again, deposited into a vault. In this case, we're using Brinks. We also use IDS of Canada, and both IROC approved, both fully insured. You even have the ability to go and personally audit your holdings. Again, what's the motto? If you can't hold it, you don't own it. So we want to give clients the ability to go to the vault and personally hold their physical product. Or if it comes to taking delivery, even if you want to pay your withholding tax and take delivery of the physical bars that were on your inventory report, you can do it. The number 18778-SILVER, the website guildhallwealth.com. Again, this is the easiest thing that you could do. Now, I know it's new to a lot of people, so it doesn't seem easy. That's why it's great to start small. Pick up 1 ounce of gold, pick up a tube of silver maples, see that process for yourself, feel what it's like to have that physical product in your hand, where you've laid out the cost to acquire it, you've taken it home, you've gone through the process, and you will see how easy this is. In the next segment, we're going to talk about some of the mint sales in the market. And while last week we talked about 28 trillion reasons to be in the gold market, Jerry, you've brought an article where this company has researched 13 reasons to be in the market. So stay with us there. The number 18778-SILVER, the website guildhallwealth.com. You're listening to The Real Money Show on Global News Radio, 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER, the website guildhallwealth.com. Now, when you think about winners, when you think about the podium at the Olympics, you think about gold. When you think about what's the best that I can get, what is the gold standard, right? There's all of these inferences of gold in our society that we don't necessarily always put two and two together. Why is it that gold is so important? Jerry, take that on.
Well, gold is money. It's been money for thousands of years. It offers, again, independence from financial instruments, the banking system. It's independence from currencies. It's not printed. Aristotle's 5 characteristics of what money is. I recommend everyone look into that. What is money? Gold has qualified as money because it's recognizable, it's durable, it's scarce in the intrinsic in value. So these
and
are
divisible.
And divisible, exactly. You can go as low as a gram of gold up to a kilogram at Guildhall. We will supply everything that you need. We're a one-stop shop, as Jeremy mentioned. But this is the easiest and it makes sense. If the cash in your pocket isn't scarce, it likely won't be around for another 50 years. The average currency lasts about 100 years, Jeremy. So we're on guard. We have to be cognizant of how long has our currency been around for? Decades? Okay, we have to have an exit strategy here. And with gold, he who has the gold, or he or she has the gold, makes the rules. You can now convert into any currency that they introduce in the future. You're ready because you can convert that into anything.
And there is a difference between currency and money. Currency is what you would use for the exchange of goods. Money would be a way of preserving value, right? So if one of the main tenets of money is that it preserves value, then you look at currencies right now, fiat currencies around the world, US dollar, Canadian dollar, you name the dollar, they're losing value. They're not holding value. They're not maintaining value. The fact that the Fed wants 2% inflation, meaning it will, at minimum, the dollar is losing 2% purchasing power a year, just tells you that these are currencies. This is not money. At the end of the day, fiat currency is a currency by decree. It's not a currency by innate value. Mm-hmm. And that's what gold and silver does. So yes, there's no gold standard as we live on planet Earth right now. But there is a de facto gold standard, meaning if you don't like what you see in the fiat currency right now, if you don't like the way the government is deficit spending, and you don't like the route that this is all taking, how do you get out of the system? How do you get out of the way of that train coming down the track? You want to get out by having assets that you control, that you own, that have no counterparty risk, that are rare, that there is a limited supply of. And one of the reasons why gold and silver will be explosive going forward, as they have been in the past, is that there is a limited amount. You can't just snap your fingers and open a whole bunch of mines and double the mine supply overnight. It just doesn't happen. So this is what's going to push the market much, much higher because there's a limited supply of physical metal. Now, if you're going to go invest in paper, then you're essentially hitting the steam valve on a pressure cooker. You're not helping the situation. If you own a certificate, or you owned a gold-backed fund, or you're investing in a pool account where you don't actually own that product, then you are not helping the scenario of getting those prices to an explosive level. You have to follow the rule. If you can't hold it, you don't own it. Jerry, what are your thoughts?
That is the motto. It has to be physical. We don't agree with the proxy that represents any derivatives that represents price trackers to gold. You need the physical, because the physical is your wealth insurance. And for the last few months, we've been, meeting a lot of people. So busy here at Guildhall. We've never been as busy, but every day it's just an encouragement. We speak to a lot of people who have fled countries that experienced hyperinflation, that experienced communism, and experienced things that we're seeing here. It's a slow boil. It is happening before our eyes, and these are individuals that tested what we're talking about. They put it to the test. The physical gold is what allowed people, citizens, to reset themselves. If they have to leave, you can easily get on a plane with a few gold maples and get restarted and restart your life. This is not, this is not something that can be printed. It's your hedge against hyperinflation. And funds and wealth funds and the wealthy are preparing for massive inflation, Jeremy.
And if you want to get your own golden parachute, it's very easy to get involved. You just give us a call at 1-877-8-SILVER and the website guildhallwealth.com. Jerry, as you know, we had Steve San Angelo on the show about a month ago, and he publishes the SRS ROCO report, and he put out a recent report talking about the sales figures halfway through the year on both the Royal Canadian Mint as well as the U.S. Mint. And it's very interesting because on the face of it, it looks like purchases of silver eagles and gold eagles in July have completely fallen off. Now, obviously, we're only a quarter of the way through the month, but May, very quiet. I guess they cut off sales in May. But huge through the first quarter of the year. January, February, March started to fall off a bit in April, and then again, some bigger sales in June. But those first 3 months really pushed the market in terms of the supplies. And ultimately, when you compare the first half of the year in 2020 to the first half of the year of 2021, this is where things become a lot more revealing. In 2020, there was 12.6 million ounces of silver eagles sold. That's 12.6. And so far this year alone, we're at 15.9.
Wow.
So definitely on the higher end of things. In gold, it's even more interesting because gold last year, January to June 2020, 397,500 ounces. So just shy of 400,000 ounces. Today, in 2021, gold eagle sales from the U.S. Mint, 653,000 ounces.
Nearly doubling.
Almost doubling. So these are huge numbers. This is going to keep on going because as more bad news comes out about the economy, people are going to flee somewhere. And here's the thing. There is no yield anywhere. Mm-hmm. There is such a war on savers. You can't put your money in the bank and get anything.
Right.
You're getting literally nothing. If you sell a house, right, what are you going to do? Put it in the bank account and get zero? Mm-hmm. Get less than 1%? Are you going to put it into a GIC and get 3% over the next 3-4 years? It's interesting how the GICs are under inflation.
Right. Way
under inflation. So you have no choice. You either have to take risk, chase yield, or you could say, you know what? I'm willing to pay the premiums to own physical product. Okay. The cost to store it, let's call it 1%, give or take. Mm-hmm. And we're willing to add a little bit of cost because if you look at the performance of gold over the last 20 years, you're looking at an average of 11% a year. Now, last year, I think it was 22%. The year before that, it was about 13, 14% on gold. Silver was even better. And when you look at those numbers, you say, well, this isn't much of a risk because on the one hand, I'm taking my money out of the system. I'm putting it into real money. Yes, I'm not chasing yield, but this is an asset that can increase in value significantly, even in a shorter period of time. Now, we think that you should always have some physical in the portfolio for a long period. Maybe you put in a little more for a shorter period of time. But I think even short term, and even within the next 6 months, I think the market could be, again, explosive. Do you think we could have? Do you think, Jerry, that we can break this $28 barrier in silver? Do you think that it is a possibility that we could go into the $30 range? I know CIBC thought so. They put out a report, an article a couple weeks ago, and they see the price of gold moving above $2,000 an ounce this year. What do you think the possibilities are? Time for you to stick your neck out and give us a forecast.
But you know what? I'm very confident in doing this week over week. This is what we do. There are many more reasons for higher precious metals prices than weaker precious metal prices. The fundamentals, even the technicals. I mean, you mentioned 11% per year, very moderate. This is at least you're beating inflation. You're growing your wealth. But then we have to also incorporate things like technical analysis, giving us a glimpse of the future. Forecasting. How can we forecast?
Okay, let's talk about that for a second. Downside risk. Let's talk about downside risk. What are if someone said, anything could happen, the price of gold could drop significantly. Let's look at the reality of the situation and see what the potential is. What do you think?
I don't see any potential. I don't see too many reasons for weaker precious metals prices besides some type of reversal in the loose monetary policy. If the debt just somehow disappears, then you can have a retracement of gold. And the question would be, will it be a long-term retracement? In my opinion, it would likely be short-term. Any bounce here in precious metals will be quickly caught up by buyers because there is a need for the physical from a banking perspective. The Bank of International Settlements is calling for institutions to get the physical, not the proxy, not the derivatives. It's a big move away from paper. And you have nations doing the same thing. So any type of pullback is going to be met with some severe buying.
Yeah, I think on the one hand, you have to look at the premiums in the market. There's still higher premiums. Now, I think they've come down a little bit over the last several months, but there's still higher premiums in the market. That tells you that the market is tight on supply, that there's a stronger demand than there is the supply coming into the market. I think that's number one. I think where you were going with it was great too. You have to look at the fundamentals. Okay, did the dollar just all of a sudden get incredibly strong for any reason? And when it comes to the dollar getting strong, it's interesting because, you watch day to day and sometimes the market can go up, but what are the real factors driving the dollar? And is it actually getting stronger in a sense? And what do I mean by that? I mean, if interest rates were to go up significantly, that would drive investment into the dollar. That would be a great reason for the dollar to rise. Okay. If you have money printing going on at an extraordinary rate, how can you reconcile a stronger dollar? Short term, you're looking at noise. Long term, you cannot reconcile that. So when we look at the fundamentals of the market, where's oil prices going? Where's the interest rates going? What's the value of the dollar? And we can talk about it in Canadian or US, it doesn't matter. But when we see the fundamentals in the landscape of the fundamentals, we see that not changing.
No.
And so therefore, the only thing that you could see as a pullback in the metals would be some sort of paper smash if that was something that could happen. And in those situations, they're usually very, very limited in time. Mm-hmm. They're very short-term things. They become a bit of an opportunity. But even last year when it happened, the price of silver went down to $12. You still couldn't buy it for less than 18. So there is, again, the real world says, I don't care what the paper price is. Here's what the real world is telling you to buy it. So that tells you that there is such a limited downside and such a massive upside. The number 18778 silver, the website guildhallwealth.com. We're going to continue this discussion on the other side of the break. You're listening to The Real Money Show on Global News Radio, 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver, the website guildhallwealth.com. We have developed a way for everyday investors to acquire physical precious metal in a registered account. It's something that we pioneered here at Guildhall. It started with a vault getting IROC approved. That's the Investment Industry Regulatory Organization of Canada. And once we had the regulated vault, we then started to seek out partners of who would want to take this on. And we partnered with Questrade. And their mandate was to say, okay, we are a low cost brokerage, and it's all self-administered registered accounts or your own margin accounts. And so we started to work with them, and the idea was, hey, look, we know that there is a trend out there that people want to have the physical commodity. They know that they want their own personal ownership, just like central banks around the world want to own their own gold, just like Germany repatriated their own gold from the United States soil. We knew that people would follow the motto, if you can't hold it, you don't own it, that there was a demand for that. And so we started to work with Questrade to develop this vehicle, and it's worked out perfectly. People are able to open an account. We walk you through it step by step, often doing the heavy lifting, helping clients open their accounts. And then we help them to physically buy the precious metals using funds from their registered accounts, RSP, TFSA, LIF, RIF, etc. And then once they've acquired that product, it gets delivered to the IROC approved vault, and the client then receives their inventory report. No counterparty risk. Who owns that metal? You do. Does Questrade have a say in that? No. It's your product. They're simply the custodian of the registered account. Just like you may have a registered account with Manulife or CIBC or TD, whatever financial institution, they are the custodian of that account unless you decide, I want to move to a different company or a different financial institution. And then the new financial institution would be the new custodian. And that's what this is. Mm-hmm. So yes, there's a custodian of the registered account, but who owns the product? You do. This is the way to protect yourself going forward. The number 18778-SILVER, the website guildhallwealth.com. Jerry, what are some other ways that people could protect themselves going forward in terms of protecting against inflation, protecting against the devaluation of their currency, protecting against stock market collapses? I mean, how long do you think the stock market could keep going higher?
Well, we could look at the stock market this week, reacting to the FOMC, much less hawkish, less transitory talk. So the whole language just went down the drain for them, as did the stock market. There was a lot of talk about potential tapering. And on that note, the stock market takes a hit. Look, when you have assets that have been a beneficiary of cheap money and loose monetary policy, you have to understand and come to a point where, when does this end? And the stock markets have not have a good correction or a crash period in a very, very long time. So if you want to stay in the stock market for another year, you're just rolling the dice. You're rolling the dice with your portfolio. And it's an advisable thing. I mean, financial planners do recommend holding at least 15 to 20%, as Paul recommends here at Guildhall, 15 to 20%, and move that out of your RSP. Move it over to Guildhall, and we help every step of the way. And further, if you're an individual like who does not want to confront your financial planner, you don't have to. We do the work for you. We'll even conference them in if need be. We'll do the dirty work. We don't want you to, get the pushback or ruin a relationship. We're here to move that portion very smoothly, but it's really about owning something physical and tangible, and rush to do it now. Since inflation is rearing its ugly head and is getting worse, you have to scramble now to put that cash, convert it out of something that is sinking in value, and put it into something that is a tangible asset, because it's negatively correlated or to the US dollar, which is going down.
And Canadian dollar.
And the Canadian, all the currencies are racing to the bottom. But then even further, which hard asset should it be? Silver, in our opinion, 69 to 1 silver to gold ratio today, even much more undervalued than gold. So it's a great buy. Silver is really undervalued with so much potential, not only as money, but it has industrial attributes, solar, medical, antimicrobial, and plus it's the number one conductor in the world, number 7 in market cap. Gold, number 1 in market cap. You have liquidity, and there's nothing safer. And in our opinion, we have tremendous topside potential. So it's an exciting time in either metal.
Jerry, it's all about gaining information, right? Because if you have the information, then you'll have the knowledge, you'll have the confidence. It's going to give you the power to take action and make decisions properly for your portfolio. And we see that every day where people are taking control of their own finances and saying, you know what, maybe I don't need to have a manager carry this for me because I'm not necessarily seeing the gains. At the same time, you know, inflation used to be this sort of quiet, insidious thing. Very, you know, you couldn't see it really happening unless you were looking at the much, much bigger picture. Today, I think people can see it. I think it's unavoidable. I think it's out there in the light. You go to the grocery store, you go to the gas station, you know it's happening. And then you look on the horizon. And we talked about this a couple weeks ago, and now it's starting to become talk more in the mainstream, Jerry, is people are starting to analytically look at the Green New Deal and this new green economy and getting to zero emissions. And they're saying, how do we do this? How do we do this without gas? Right? It's impossible. How do you plug a whole bunch of electric cars into the grid without having the system affected, right? And so we talked about that. We talked about the fact that there was I think it was the president of Russia talking to OPEC saying, you know, the price of oil is going to go to $100 and $200 a barrel because of trying to get to a green economy.
Agenda, yeah.
It's just not going to happen, right? So, and we don't have the technologies. You have to build these technologies, and what's all that extra cost going to add? So these are things that are now being analytically looked at to say, is this really the way to go? Is there another way that we can maybe try to achieve these goals? Again, it all comes down to information. There's so many books out now on precious metals. You know, when we started at this firm, you know, 15 years ago, there was maybe like one book out there. I think like Mike Maloney's book was maybe out there. You had to go to Ron Paul's book or something.
Yeah.
But now there's so many books that you can get. You can just do a search on Amazon just to see what all the books are and, you know, get the recommendations of all the other ones. And they're so great because once you learn why, you know, not just take our word for it, to steal a phrase from LeVar Burton, and the Reading Rainbow. plug. Now I've aged myself. But, you know, people they can go out, do their own research, not just listen to the Real Money Show and see that we're not the only people saying these things. And again, getting that confidence, getting that information in hand to be able to make this purchase for yourself and be able to take control of your own finances. And once you own physical metal, I can tell you, by watching it over and over and over again, the aha moment of when someone puts that physical metal in their hand and they could say, wait a minute, I'm responsible for this. This is actually my asset now. I can't blame an advisor if I lose value, if it goes down in price. It's all on me. Mm-hmm. That's okay. Again, if you're armed with the information, you have the confidence, you'll be happy that you did it. You'll rest at ease. You'll have that peace of mind. The number 1-877-8-SILVER, the website guildhallwealth.com. We'll be right back. It's The Real Money Show on Global News Radio, 640 Toronto. Welcome back to The Real Money Show. The number 1-877-8-SILVER, the website guildhallwealth.com. We're talking about turning your wealth into gold. This is the gold standard. This is how you're going to protect yourself. This is how you're going to stay out of the way from all of the dangers that are out there right now, whether it is inflation, something we've been talking about extensively on the show today, whether it is geopolitical unrest, which can be one of the biggest effects of money printing. You know, governments get upset. You know, what are you giving me here? You're giving me crappy money. I need something else. Give me your ports. These type of things. You know, really, I'm very concerned with pension funds. You know, if you can't get people back to work, how are you going to get people to pitch into the pension fund to pay out for other people? I think there's a lot of things out there that are dangerous right now. I think there's a lot of things we don't know how things are going to play out. Yep, there's lots of great things in the world. No question about it. You know, we're not here just to be completely doom and gloom. But when it comes to your money in the bank, right? There's a term, money in the bank.
Right.
That's not how it goes anymore. It's my portfolio is as good as gold.
Mm-hmm. Measure
right?
your wealth in ounces.
Measure your wealth in ounces. Absolutely. That's definitely something, Jerry, when people are buying for the first time, that they have to, it takes a while to get to that point, mm-hmm. right? Because at the beginning, you're more concerned about cost of doing business, how do I get involved in this, all of these things. But eventually, you start to say, how many ounces do I
Right.
have? And that's really the important part. I know for myself, okay, I can kind of remember when I first purchased gold, but I can't tell you all of the other times that I purchased. What I do know for sure is that most times I purchased, the price went down right after.
Likewise.
Right? So, okay, maybe I don't have the best timing in the world, but over time, does it matter that I bought it at 800 and it dropped down to 700? Because it's now trading at 1800. Speaking of $1,800, Jerry, over the last several weeks, the price of gold has really hung in there at 1800 after that last dip in the market. What do you think is behind that? And does it have anything to do with the dollar at all?
Yeah, what we're noticing, gold right now is continuing to shine despite any U.S. dollar gains. Normally, we always talk about gold being negatively correlated to U.S. dollars. So what that means is if dollar drops, gold will pop higher. And alternatively, if the U.S. dollar starts to catch the bid and start going up, gold will normally fall. But we did not see that this week at all. There was the FOMC meeting, U.S. dollar gained, and unfortunately for the U.S. dollar bulls, the gold continued to shine. So this was a very key moment for us in this market, understanding that gold is seeing right through the jargon, right through the jawboning. This is an asset that is it's quite remarkable, especially when faced with so many reasons and so many forces at play. Gold is very resilient. In the beginning of June, we had a retracement of about gold from
about $80.
Yeah, about an $80 drop, hitting about 1740. 1760 was support, and we just bounced right up, and we're back to 18.
Now, for the uninitiated, is gold expensive right now? Like if I look at the price on its face and I go, okay, $1,800 before I actually acquire the physical product, because that's $1,800 spot price, and then, I have to buy it at a higher price for the premiums, et cetera, and then convert into Canadian. Is it expensive right now?
No, not at all, especially going back to technicals. Right now, the fundamentals are showing that this is a time for precious metals, and it's right now we are very affordable. We have a very strong Canadian dollar, surprisingly strong. So any loss in your currencies is your gain in gold, because gold has the topside potential. We take a look back at the technicals. We want to know where gold's going. We want to know that can it go up more than 15% per year? Well, if we take a step back, like these were all short-term technicals that we're talking about, very, very short-term, because you want to know when to buy and when to get into the market. But long-term, where are we headed? Back up 20 years, we have a massive cup and handle that no one on the technical side can avoid. This is a very bullish indicator for gold, also for silver. Connected are the two. And where is this leading? It's leading to much, much higher gold prices, close to 10,000 without inflation. This is all on the technicals. Add in inflation, this is where we get the forecast for the wealthy funds. Hedge funds are talking about 10 to 12,000 gold. This is very probable. Is it possible? For sure.
I think you also want to keep in perspective that, again, if there's $300 trillion plus in debt globally and there's only $10 trillion worth of gold globally, you can kind of say, well, no, gold has a much higher way to go before it's equal to the value of the money that's been printed. And that's where I think the catch up really is. And that's where I think that there's an opportunity here. I think that's where the value is. I think there's big value there when you can consider the debts versus the current paper price of gold. I think that it's something that will pay for itself in time, and you're getting that extra value. Jerry, quickly, we're running out of time. You brought an article about 13 reasons why to hold gold right now. Can you tell us quickly about that?
Yeah, so the Fed's meeting was this week. Their minutes came out. I mentioned that they pretty much backtracked all of their hawkish comments, and Crescat Capital, one of the best performing funds, they basically summed up the current macro dilemma with one of their papers, a report called A Tale of Two Destructive Outcomes. But they summarize in saying, well, today's abundance of macro and fundamental and technical reasons to be a gold investor have never been greater. The ongoing monetary and fiscal disorder in the global economy underpins the onset of a secular bull market in precious metals. And what are these two destructive outcomes? You have on the one side, the Fed can decide to continue to expand the balance sheet to ensure subdued interest rates, at the cost of setting an inflationary problem, or deflationary route by reversing its unprecedentedly loose monetary policy, tapering. So these are the two things that are
A rock and a hard place.
Oh my goodness, what a rock and a hard place.
Print money to
Summarize.
keep rates low and the threat of inflation, or you start deflating things, pulling money out and risking a massive decline everywhere.
And they cited 13 reasons why. I'll name two. The top two: 3.9 trillion added to the Fed's balance sheet since January of 2020, almost doubling its size, and the continuous need by policymakers to suppress interest rates and allow the government to spend World War II-sized deficits while accumulating record amounts of debt, now at 140% of GDP.
And and speaking of the World War, there is a war, Jerry. There's a war on savers. And when you have low interest rate and you're printing money, you're creating inflation. How are you going to protect your wealth? Can you chase yield? Are you confident in your ability to chase yield? Or do you want to sit back, do something that is very easy, doesn't take a lot of work, you just set it and forget it, and that means owning physical precious metals. We'll show you how to do it. Remember the motto: if you can't hold it, you don't own it. The number, 1-877-8-SILVER. The website, guildhallwealth.com. I want to thank everyone for listening to the show this week. We're going to make sure that this article is up on our Twitter and get it out to our subscribers on the newsletter. You've been listening to The Real Money Show on Global News Radio, 640 Toronto, and we look forward to speaking with you next week.